Welcome back. Stocks are lower this morning. Futures indicating a decline at the start of trading as we look ahead to a big week this week. We got retail earnings, retail sales on Wednesday, as well as the PPI coming out tomorrow. Walmart and Home Depot both reporting before the bell tomorrow. Take a look at all of these companies reporting. Also, housing starts, building permits coming out on Thursday. Retail sales, as I mentioned, Wednesday, and the October Producer Price Index out tomorrow morning. Joining me right now is Cornerstone Wealth Chief Investment Officer Cliff Hodge. Cliff, it's good to see you. Thanks very much for being here. So what kind of a week are you looking at, and what's most important when you consider all of this data coming out? PPI, retail earnings giving us a sense of the consumer, and of course housing data as well.
Morning, Maria. Great to be with you. It's going to be a big week for the consumer, and that's really where we're going to be focused. The market has been laser focused on any sort of inflationary data for the past 18 months. Just look at the reaction from last week's CPI. So we're definitely going to be watching PPI for any sort of clues that we're going to get this continued decline in the momentum of inflation. So we'll be looking for that. But more importantly, we think the market is getting ready to shift its focus and the narrative really from inflation now to growth. And as we both know, consumers drive 70% of the economy. So clues, like you said, on retail sales, on a lot of these major earnings announcements that are going to be coming out this week, are going to give us a really good indication of the path of how the consumer is faring, especially as we go into the holiday season.
So how would you assess things? I mean, you take a look at big tech, and big tech really has been underperforming. Dan Niles joined me on Friday, and he said that some of that underperformance is suggesting that we're going to have a weak holiday season in terms of retail and in terms of online shopping. What are your thoughts on the macro story right now as we continue to watch inflation at 40-year highs? Got the October Producer Price Index out tomorrow morning. And right now, the expectations month over month for a 0.5% increase, and year over year, 8.3% increase for the PPI, Cliff. How does that play into your assessment of where we are in the macro story?
Inflation has definitely taken a bite out of the consumer. There's no question. However, the good news is that when you look at cash balances, you look at things like leverage, consumers are still in really good shape overall. We've got really high balances in bank accounts really across the income spectrum. And so we think, while the holiday season may be a little bit slower, that by and large consumers are still in fine shape. So what we're going to be looking for, go ahead.
No, please continue.
Yeah, so we're really going to be interested in guidance as well from a lot of these big retailers. You mentioned Walmart, you mentioned Home Depot. We want to hear about not only what their results are currently, but what are their plans for the future? Are they hiring? Are they laying off? What is their outlook for the holidays? So that'll be a great data point for us this week.
Well, I mean, look at that reaction of markets to the CPI last week. The Dow Industrials were up 1,200 points, the NASDAQ up 800 points right after the CPI came in, a little lower than expected. Do you buy into that you should be buying stocks here after the latest data that showed inflation was off of the highs? The markets were surging last week. Was that the right reaction? Do you think investors got that right?
So it's a welcome sign, but it's really one data point. And markets have really been focused on core CPI. And last week, we got a 0.3% month over month increase, which was a beat relative to what the markets were expecting. But all you have to do is go back and look at July. That's the last time we got a similar kind of reading on core CPI. No coincidence that is also the time we were in the midst of a bear market rally. And so it's one data point, it's a welcome sign, but the reaction was a bit strong. We are going to need to see multiple months, 2, 3, 4 months of this continuing deceleration in inflation for us to really feel good about the path forward in the markets. Yeah. The other shoe to drop, which no one is really talking about, is next year's earnings expectations. The market's still showing a 5% year-over-year growth rate for earnings in 2023. When you look back historically during recessions, earnings tend to drop by 14% on average. So there's a bit of a disconnect between what the market expects and then what could likely be our economic reality next year.
All right, we'll be watching all that. Cliff, great to get your insights on that. Thanks very much. Cliff Hodge joining us this morning.